Each year, more than 7% of the world's maritime trade takes a shortcut through the Suez Canal. It's one of Egypt's most vital assets, and last year earned the country $5.4 billion.
It was a very much growing area of the economy, growing, I think, by a good 25% over the 3 years per annum.
But that was before the crash. Since then, global trade has fallen through the floor. And if no one is buying, no one is shipping.
The business have been used to 10-15% growth a year, and suddenly the market is contracting. The contracting market comes at a time where, for example, shipping lines have had huge expansion programs with large vessels coming online. So the supply-demand picture is very much in favor of the buyers at the moment, and that have resulted in prices going, rock bottom, and shipping lines are almost all of them in the reds.
In the dry bulk trades, again on the spot market, from the peak about 18 months ago to the rates now are actually about 10% of what they were.
The effect on the canal was immediate and significant.
Before the recession, the daily average was 62 ships per day. That's before the crisis. After the crisis, it's about 49 ships per day. Looking to the revenue, it was $15 million per day, and now we had 11 million per day.
The collapse in the price of oil has also pushed fuel costs down to a level where ships can now afford to take the longer route around the Cape of Good Hope.
Before the crisis, the time was very important. So they go through the Suez Canal to decrease 4 or 5 or 6 or 7 or 10 days. Now, the time is not so important for them.
Another factor affecting the canal, and one that has received the most media attention, has been the increased incidence of piracy off the coast of Somalia. Pottengal Mukundum is the Director of Commercial Crime Services for the International Maritime Bureau.
Last year there were 111 attacks and 42 of which there were 42 vessels hijacked.
This year there have already been more attacks than the whole of last year. As a result, the cost of insuring a ship sailing off the coast of Somalia has gone through the roof.
They've gone up about tenfold for vessels going through the Gulf of Aden and along the coast of Somalia.
The combined effect of the problems facing the Suez Canal meant revenue dropped 27% during the first quarter of this year. And even though the costs of maintaining the canal, such as the constant dredging, remain, the authorities decided this year not to raise tolls and are offering discounts to certain types of shipping.
Such as long-haul ships, ballast, VLCCs. We have environmentally friendly ships, we have cruise ships, we have LNG carriers, we have cargo incentive for LNG cargo.
And what the authorities also done is look to deepen the canal and widen sections of it to have parking areas so that more ships can travel through the canal on a daily basis.
It was a welcome move, but the shipping industry, naturally enough, would prefer they went even further.
We were pleased to see that the Suez Canal Authority froze its canal tolls this year. However, we're in dialogue with the SCA, and although it's for them to make the best decision, our view is it would be in everyone's interests if they were actually to reduce canal tolls at the present time.
So far there's no sign of that happening, but a prolonged period of global recession might force the authorities to change tack.